Dale, thanks so much for your time. So I'm following perhaps one of the most excited individuals about these jobs numbers, being the US President Donald Trump. Quote, one of his many tweets since the numbers were released: "These numbers are incredible, a really big jobs report. Great going, President Trump." Him saying to himself, kidding but true. He's not lying, though. America was expected to drop jobs, as we have seen across the world, particularly in the month of May when those COVID-19 lockdown restrictions were quite stiff. Yet the opposite has happened. How are you making sense of the health of the US labor market in the month of May as the numbers currently stand?
Well, Fifi, I think there's a difference when we look at the US to, say, South Africa. The US has a very flexible labor market. So the impact of COVID-19 obviously resulted in a very rapid shedding of jobs. And likewise, as soon as the lockdown started to get eased, I think the ability to add those jobs back and the willingness to add those jobs back, because you can shed them quickly, is there. And I think that certainly does contribute. I mean, I do think that people were surprised by this number. So, there's some question marks as to, what did we miss in the high frequency, initial jobless claims numbers that we were seeing. So maybe we'll have to wait and see how this sort of plays out. But it was a very positive number. I'm not sure we can expect the same sort of V-shaped type of recovery in employment that the US has seen, but we should see, even in our market, I think if you looked at the breakdown of which jobs were lost and which came back strongly, I think construction was one of the strongest growing sectors. And I think, obviously earlier this week, construction went back to work in South Africa, and I'm pretty sure you would have had a strong bounce back in construction employment in South Africa, similar to the US in that regard. So we'll have to wait and see how it all plays out.
All right, I mean, waiting and seeing in terms of our case specifically and how it will compare to the US, but focusing just then on the US and the type of recovery that they are likely to see, because there was huge debate around whether it would be V-shaped or U-shaped or L-shaped or whatever shaped. Simply put, for those of us who aren't in the world of finance, whether it would be a quick recovery or a prolonged recovery from COVID-19. These numbers suggest that we could, or America could, be bouncing back fairly quickly. I mean, is that a realistic reading here? Or could there just have been, like you say, something missed in the high frequency data or an anomaly somehow in the month of May figures, and we could perhaps see, something a little bit more in line with expectations going forward?
Well, I think we can see initially a V-shaped type recovery, but there's still, I think, a fair bit of debate as to where this sort of settles. US unemployment has blown out to 13.3% now based on these numbers. But does it come back to 3%, where levels, that we were seeing, or is it going to settle somewhere around 7 or 8% and then be a far more gradual sort of recovery story that needs to take place? And although markets, given the pace at which markets have rallied, you would imply that, this is, we've basically leapt over the valley and we're back to normal and growth will be there at the economy will be the same size as it was previously and growing. I think it's a bit of a stretch to believe that to be the case, especially in some sectors where I think there will be some damage that takes a lot longer to repair, particular, hospitality, travel, those sorts of sectors where I think, people are going to take longer to get back. Although we have seen in the US in particular, I think the airlines in the last week or so sort of, certainly seeing a significant increase in the sort of loadings on their planes.